Hey all, welcome to ShareTreck. It's the 10th of May 2022 and this is our daily roundup. I've been having a tough time keeping up with the earnings that are coming up. So sorry for the delay, but I'm going to have a separate video released later on today covering earning among 4 companies. I'll talk about them in the slides going forward. So let's get started with our daily update. Well, our condition is just like Wile E. Coyote that you saw in the clip earlier, falling off the cliff, and we have to dust ourselves, get up, and get back on that up again on the cliff. We had earnings from CRISPR Therapeutics, Beam, Bluebird, and Caribou. All reported disappointing results, except for Blue surprised with revenue. I'll have a separate video to discuss the earnings, and I promise to put it up later today. Let's go on to the next item. Bitcoin falls below 30,000 mark for the first time since July 2021. Many experts are saying that the correlation between Bitcoin and Nasdaq is going to continue until the market turns around. After that, there'll be a decoupling between them. I don't understand the logic behind either of these statements. I really don't know how far Bitcoin is going to fall, but it's definitely in a place where it hasn't been for a very long time, and it could fall further. Having said that, the stock market fell for 2 days in a row. Dead cat bounce is possible today. Select counters, really good companies which are beaten down, may lead the dead cat bounce back. A bit of green followed by again red. So I think that the markets are going to be at the bottom but volatile within a particular range, moving up and down in that range until we have some really solid good news, or until the Russia-Ukraine conflict gets over, or until China's zero COVID policy goes away, or something positive that comes up, like a CPI report which shows that inflation is on the way down. Something like that is needed for us to get to the next range bound movement. So we'll be moving range bound at the bottom with some good news. We'll move a little up, but we'll still be range bound, volatile, consolidating sideways. I expect this to happen until we are at the end of the third quarter, and then the markets would pick up, because by then Russia-Ukraine crisis should 100% be resolved. China should have found some solution for its COVID issues, and production should be back up again. And by the time we would have had a couple of CPI reports which confirm that inflation is going down. So this is the blueprint that I have in mind. You can validate this blueprint with your own research, and if you believe in that, just stay calm, because there is nothing to worry about in this market. If you follow all the principles that good investment practices require, and you didn't put all of your money and everything into the stock market, you should be able to wait it out because of a few reasons. First of all these down positions in the market do not last too long. If you see the history of the stock market, if you look at the chart, nothing lasts for more than 6 months, and typically prices start moving back up again. So that is the first point. Second thing is, your losses are only accrued, they are not realized. Until you sell a stock, you don't realize the loss, so your book value is still intact. So you should keep that in mind. Those are the points that I would like to make. There is no need for us to panic. We just have to stay focused. And if you had done a good investment practice and you have cash in hand right now, you could do something like dollar cost averaging. And second thing you could do is, if you don't have money in hand, you could shuffle your portfolio and get rid of the weaker stocks and get into the stronger stocks, which are more likely to be stable and go up faster and are dividend paying. So you can make those kind of quality changes in your portfolio, and that's what will be reflected in the market today. People will move for quality beaten down stocks, therefore those stocks will show green, and people will be moving out of high risk stocks which do not have revenues and which have got a revenue burnout, and that's where many of our CRISPR stocks are likely to feel the pain. So this is going to be the anatomy of the market, in my opinion, going forward from today onwards. There has been a lot of high profile visits to Ukraine, but no direct support to end the war. So this is rather ridiculous. Everyone is afraid that Russia is going to bomb the hell out of the world with its nuclear bombs if Western countries got involved. At the same time, they're continuing to give weapons which are not sufficient to kill the war. but just to prolong it. And there has been a visit by Jill Biden and then by Justin Trudeau. And I find this very funny because there's this war going on and the president of that country has to focus on the war, but he has to come and do this photo ops for all these guys who are preening around that place and trying to improve their political career back home by showing that they're so friendly with Ukraine and all that. This is really taking things too far in my mind. The markets are suffering. The geopolitical piece is hanging by a thread. People have to be more decisive, and all these photo ops and other things for personal political gain, all these things should probably take a backseat, and real hardcore military aid should be given. Diplomacy should go on high swing. Putin should be engaged and forced to come to the table and have some kind of a resolution, because we are in the 21st century and this kind of stupid conflict is absolutely unaffordable. Our progress as mankind is being held back in many fronts because of this conflict. This is so silly. With that said, let's go on and have a look at Nasdaq and the indices. Let us look at the stock market heat map. This is a one-day heat map just reflecting what happened yesterday. And you would see that it's a sea of red. So do not despair. Most of the market segments are facing this problem. This is only going to be temporary, short-term problems. Things are going to pick up again. And most of these companies will be either viable and or taken over. Very few are going to face major problems. Of course, R&D and other activities are likely to get delayed because of the fact that these companies will not be able to raise capital, and the cost of capital is going to be high. But over a period of time, another 6 months or so, things are going to start to look up. So please stay positive. If you look at 1 week performance, you can see a little bit of green out there. And if we go for a 1 month performance, we still have phenomenally red market. So the good news from here is that we have already been enduring pain for almost a month. These kind of situations do not last for more than 6 months. So we can knock one out of the 6 months. And so we have another 5 months to go ahead. That's the way I would look at it to motivate myself. And I'm going to look at the groups out here. If you look at 1 day relative performance, consumer defensive was the one which did better than the others. All have been losing, but consumer defensive has been the best among the sector. Even though it has lost very less. And that shows the amount of fear in the market, because consumer defensive generally does well in recessionary times. In a 1 week relative performance, you can see utilities are also doing very well. Energy was the next best, but energy has fallen severely because it had taken a very high jump. And as I warned while it was going up that it's going to fall heavily, you can see the result out here. It has fallen 7.41% for the day, and it has fallen 10.25% for the week. And for the month, if you look at it, energy has fallen 4.62%. There is more fall likely for the energy sector because as things start to mend, energy will be a leading indicator which will show that things are getting better. So this is the state of the market. We are very close to capitulation in my opinion. And once capitulation happens, I'm thinking there's going to be consolidation, which will be a range bound movement, as I mentioned earlier. So watch out for that. So let's start off with the futures first. Futures are up 1.33%, as you can see out here. That's around 138 basis points. And I can assure you that this is a dead cat bounce. That's my gut feel. And this is going to happen because good quality companies, which are dirt cheap right now, because of this two heavy falls that we saw. Just give me a second. Let me go to indicators. And let us look at Nasdaq. So because of the heavy fall that we have seen, we have dropped all the way from 325.57 to around 300.34 pre-market and 296.81 at the close of market yesterday. So that's a huge drop. So there is going to be a sympathetic bounce back, and the bounce back is being shown in the futures. And also if we go into pre-market for some really good quality companies, I bet we are going to find that pre-market trading is going on at a higher price. See, look at Google. 2,261.68 was the price at which it closed, and right now pre-market it is at 2,290. So where is this money coming from? most probably from weaker companies in the portfolio of investors which are being sold. Now let us go to look at Apple. Apple 152.06 close, and it's at 153.50 pre-market. What is the other good company that we can look at? Let us look at Microsoft. Where is Microsoft? Yeah, here it is. Microsoft 264.58 at close and 267.60 pre-market. Now let's go to our biotech, and in biotech let us look at Editas 11.11, 11.45. So we are seeing some gain out here. IDNA, we don't have any pre-market indications out here. Beam 33.29, 33.80. So it's looking good right now, but as the day goes by, money is going to move more out of biotech and likely to go into really good quality blue chips. That's my prediction. So we are going to have sectoral green patches in the heat map, and those are going to drive the market. But remember, Nasdaq and all have got heavyweights which drive the index. So there may be smaller companies which are going red that will not be reflected in the index as long as Apple, Google, Microsoft start picking up traction. So with that said, let us go and have a look at our indices. We have got, let's start off with oil. US oil is continuing to go down. It has gone down below the 50-day exponential moving average, with 9 and 20-day exponential moving average becoming the resistance. This is starting to look good. And we can also see that the MACD is poised to cross over the signal line, and momentum has dropped below average. All these are good indicators that we are going to head down further today as far as US oil is concerned. Part of this is driven by the fear of recession as well. This is a leading indicator, and I hope this could make the Fed a little bit less hawkish when they come out again, assuming that Wednesday's CPI is going to show a drop, because not only has oil gone down, but also second-hand car prices have gone down. So those two things should definitely give an impact on the overall CPI. And in the core CPI, we should see some drop because of the increase in the interest rates. Next, let us go on to look at the VIX. This is the real-time VIX, and we are trying to come down below 33.85. Right now, we are at 33.77, and we have to see where we go from here. This is the candle for 10th. I'm going to just expand this, and you can see we are just slightly below the red line out here, line of resistance at 33.71. So we need to see further declines out here. Our next support is going to be the 9-day exponential moving average, sitting at 31.11, which is the point at which there's a good chance for VIX to bounce back up. If we have any bad news, if any of the earnings due today, which are meaningful, could give some bad news, then we could see the VIX go up. Otherwise, it can continue moving down. However, when I look at the MACD, I don't see much scope for VIX moving down, but the momentum, which is dropping slightly, if it continues today, then it can influence the MACD and push it downwards and bring VIX all the way down to the 9-day exponential moving average. So VIX is moving in the right direction. However, if you notice, we are still within the body of yesterday's candle. So things are not any better than what it was yesterday. This is the reflection of the dead cat bounce, where people either believe that the market has capitulated, and from this point onwards, it's going to go up. So people are rushing to buy. That is one reason why this could be happening. The second reason it could be happening is because people are using this opportunity to get out of bad apples in their portfolio and get into really strong beaten down companies and improve the quality of their portfolio and improve the risk profile of their portfolio. Likely to be short-lived. We'll see what happens. Now let's go on to the US 2-year. We have fallen below the support of 2.60 for the US 2-year yields. So I'm going to mark this as red. This is really good news. And we are also falling below the 20-day exponential moving average. That's again very good. We are moving away from the signal line in the MACD. That's also good. And momentum is still above average, which is bad, but it's falling down. That is good. So overall, we are getting a bullish indication from the 2-year yield. If you look at the 10-year yield, it's also giving the same indication. I'm going to mark this support as a resistance. And our MACD is also looking good out here. It's moving away from the signal line. So 10-year is also indicating a bullish bias today in the market. And if I was to look at IXIC, because today's candle will not be out yet, we can see that we have a support at 11515, and we have got a couple of resistance here, 12,106, which I'm going to mark as a resistance here because we fell through it yesterday, and we are going to mark this also as a resistance. Our support is at 11,515, and we should hope to stay above that today. Let us go and have a look at QQQ. QQQ shows that we have got a bump in the Nasdaq pre-market, a bump of 0.9%, which is not very significant, but it's not very, it's not something to ignore. It shows a bullish bias, but whether it will hold on for the day or not is a different question. It depends on how the big stocks in Nasdaq perform. So if we were to look at the index out here, we have a resistance at 297.15, and right now we are at 299.89. So we are slightly above the support, so I'm not marking it. QQQ pre-market is at 299.85. Yesterday when we closed, we had a resistance out here because we have broken through the support, and we came down to 297.15. Since then we have gone up a little. I'm going to mark the resistance just so that we remember where we came from. We have to officially break through the resistance once the market opens, and then I will turn it into green. As I mentioned before, all the indicators are showing a bullish tendency out here. So we are basically likely to have a dead cat bounce. So we may go above 297.15, and potentially we may be pushed back by the 319 or 310, depending on how much strength is there in the market for this bounce back. So with that said, let us look at S&P 500 and see where S&P 500 is. So as you can see, we had this diagonal line that we had drawn. S&P 500 is again formed a doji candle, and it has stayed above the diagonal line of support. We'll have to see what happens with S&P 500 today. Pre-market is showing a bounce of plus 0.55%, which is again a very moderate bounce. We have to see what happens after the market opens, whether we are able to break the resistance at 415.60 or not, or do we just get pushed back down from there, and again this diagonal support will have to prop us up. We'll see that when the market opens. Now, if I was to look at put call ratio to get some clues, it's still at 1.29, so put call ratio is bearish. And if I look at it for the day, do we have any results for 10th? So we don't have any chart on the 10th. So this is not an indicator that we can use right now. I bet that when the market opens, we are going to fall down below 1 because there is a bullish bias everywhere else. So overall, my summary for the day is that we are going to be bullish, and this bullishness is going to come from parts of the market which are really, really strong. Companies that have been beaten down, they are going to attract capital from weaker companies that do not pay dividend, that have got cash burn going on, and that have a weaker balance sheet. Those are the ones that are likely to lose the most, and the ones that are likely to gain the most and drive the green portion of the market are strong dividend paying companies with good control over their market pricing and the ability to recover their costs and defend their profit margin. Those are the kind of companies that are going to do well today. And most probably this is going to be a dead cat bounce with consolidation beginning, which means that it will go up, hit some resistance, come back down again, and be range bound going forward. And the CPI good news is going to create a next range at a higher level where we will be consolidating sideways, moving up and down across the day. Across the days. This is likely to happen for a couple of quarters before we start picking up in the fourth quarter. This is the summary of what I think is going to happen for today and going forward. With that, let's turn our attention to the biotech sector. Here I have the biotech sector out for you. If you look at the right panel, you can see that I have sorted it among to have the biggest loser from yesterday on the top. So it happens to be Beam, and I can predict that Beam is likely to lead the charge into the positive today because it took the biggest beating yesterday. That's how the dead cat bounce generally works. So if you look at Beam, it's already up 1.53% pre-market. And if I was to go and look at the overall charts out here, you can see that we were in a bearish channel, and this red line which was there was a line of support which had multiple touch points. So it was a support point which was very good, but we have broken down below it. Therefore, now it has become a resistance for us, and our support is at 29.41. Right now we are at 33.29, and this diagonal line, if we were to raise up again today, is going to be around 41.74. So we are not likely to go anywhere near the diagonal line of resistance. I'm just going to expand this so that you can see it better. So this is where we are. So at the most, we may come to the 9-day exponential moving average, which sits at 38.42 with regard to being. Next, let us look at DNA. DNA is down 12.18, and pre-market it's up 1 cent. That's not very encouraging, but there is a bit of a bounce back coming up. Most of these highly beaten up stocks are likely to get a little bit of green back in them. Verve was down 7.66% yesterday. Pre-market, there have been no trades. And also there are going to be day traders who are looking for this opportunity to get a little bit of a bounce. So they won't be holding it for too long. They will buy, and they'll already have a standing order. Buy it at this price and sell it in 5 cents or 3 cents gain, because they'll be trading in larger volumes, especially with shares that are cheap like $2.38 like DNA. Teladoc was down 8.76% yesterday, and it's up around 0.56% this morning. Intelia is down 12.87 as of yesterday, and this morning it's up 2.58%. So this is likely to hold on for a little longer. IDNA was down 4.99%, no market trades yet. Regeneron is down 3.74%, no trades yet. Bluebird, it was down 10.72% yesterday, and today it's up 9.31%. So this kind of a gain will stay. And also Bluebird might attract a lot of day traders who can buy in large volumes, sell for a margin of 2 or 3 cents per share, and still make some money today. So those kind of trades will happen in low priced genomic shares, with day traders coming just to scalp a little bit of margins here and there as a dead cat bounce takes back. ARCG, no pre-market trades. CRISPR Therapeutics took a beating, not only because of the market, but also because of the earnings. I have a separate video coming up. I'll talk in it separately. It's going to be dropped today, I promise you. The next one is Novartis. It's down 2.73%, and it has got a bounce of 0.97%. And in pre-market trades, Caribou Biosciences is down 9% yesterday, and no pre-market trades. Pfizer has got a pre-market trade, but it's still going down. IMTX was down yesterday at 10.71, no pre-market trades. Vertex was down yesterday, 7.45, no pre-market trades so far. PSCB was down yesterday, 13.73%. So it's got a bit of a bounce, 3.41%. Again, PSCB is likely to be in the vertex of the daily day traders who are looking to get a quick margin and exit the markets. Editas was down minus 18.67%, and it's up 0.43% as of pre-market. Allogene is down 20.5, no trades pre-market. Illumina was down 11.39%. It has regained 1.96% of that in the pre-market trading, up $4.32. So this is the state of the market. The ones which are priced below $5 are most likely to have day trader interest for capturing any greens that they can see, because they can buy in large volume and make profit even with a 1 cent increase in the price. So it's going to be a volatile day today. We are going to have a lot of green happening, but there is going to be a lot of red in weaker shares. So it's going to be sectional recovery. With that said, I would like to bring this video to an end, and I'll be talking about the earnings that have come up for our genomic companies, and come up with a video later today. Sorry, I'm a bit behind the curve because there is construction going on, and I've got a very small window of time in which I can prepare these videos, record these videos. So I'm working on it. Thanks for your patience. And if you like this video, please press a like. And if you're not subscribed, please subscribe. Thanks, and have a great day. Bye for now.